Welcome to session 2, day 2. We've had a fabulous start to our second day with a fabulous speaker, Gayatri Vasudevan of LaborNet. Inspiring speaker that she is. We look forward to the next few sessions today to inspire us further. And to inspire us further, I have none other than Eric Savage, who has been doing yeoman work in India. He came from the West, spent some time in Asia Pacific, and decided to kind of lay roots in Bangalore, in South India. And over the last 10, 12, 13 years, Eric has, I think, imbibed the Indian philosophy, the Indian culture, and made this country his own with his family. And through that, I'm sure he has been inspired to create change and to create cause change. And that has motivated him to run what is probably one of the largest impact funds in the country. And he's the co-founder and CEO of Unitus. And we're going to have a wonderful conversation with Eric today. And so without much ado, let me first welcome Eric to our conversation, and then we'll take it forward. Welcome, Eric.
Thank you, Durga. It's an absolute pleasure to be here.
Thank you. So, Eric, when I spoke to you earlier, you said you moved to India from Hong Kong, where you were for a couple of years, and then moved to Bangalore. Was it Bangalore directly, or did you live elsewhere in India?
Yeah, Bangalore directly. So I had lived in Hong Kong for 12 years previously, and then was for Boston very briefly in between for a year. And yeah, then moved to Bangalore back in 2007. So I've been here for 13 years.
And what motivated you to make the move to India? Was it to cause change, or was it something that you came for and then you decided to cause change?
No, it was very much to try to see how I could make a difference with my life. And so really at that point in my career, I did mainstream investment banking with Solomon Brothers and Citigroup, and had a good run there, and really just said, okay, now, enough of, kind of focusing on helping rich people and helping myself. Let's see how I can help people who really need it more. So I was just looking to use my experience and skills to the extent I could, and really making a difference for those who are most vulnerable. And I was really fortunate to be connected with the people at Unitus Labs who already had the idea to start an impact investment bank, but wanted somebody to help them put a business plan together, go out and raise seed capital for the company, and ultimately run it. So it fit really well. All the people at Unitus Labs, Abhijit Ray and Kylie Charlton and Jester Woolley and others ended up being awesome partners for me.
Right. Was there a trigger that led to that created this inside you, saying, stop helping rich people, let me help people who need? Did something trigger this off in you? I know it's a deep question, but it would be.
Yeah, so I think that it's just always, it's a hard one to answer, because I've been asked it before, but it's just always really seemed like the right thing to do. I think that those people who have a lot of things have a responsibility to do something with them. And so it's in some ways it's even a selfish thing, because it's what I really enjoy doing. And so if I can really feel like I'm making a difference, and I'm able to make a difference at scale for many people, for hundreds of people, thousands, or maybe even tangentially millions, that's something that I really gets me excited, and something that I really enjoy. So I think it's just a culmination of life experiences, and you travel around a lot, and you realize how privileged you are for the having been born to the right parents, and gotten a chance to go to the right schools, and gotten some lucky breaks and getting jobs, and those kind of things. Of course, you work hard, but the whole world's working hard, and that led to good things for me much better than it has for most people.
Your children were all born here in India?
Actually, no. We have 4 children, and we've sampled the hospitals around the world. So 2 of them were born in Hong Kong. Our 3rd child is born in Boston, and our youngest, Max, was born here in Bangalore.
And so this work you do with impact and to create and cause change, is this something that you discuss as a family, or is your family participative in this endeavor of yours? Are they of the same philosophical thinking?
Yes and no, I would say. So I think the interest is there from the family side, but so far it's been more at an intellectual level rather than doing as much. Certainly, my wife has done more, and so she's a journalist. My wife is a journalist by background, was a on-air reporter for CNBC for a while, and did other things. But she, so she does volunteer work with a number of different organizations, and gets excited by that. Our children, who are ages 10 to 15, they're busy with all the normal kid stuff, playing football and Bharatanatyam dancing and basketball and that kind of thing. They do, like during this COVID crisis, right? That we've all been enduring for the last few months. Our third child, Amelia, decided she likes doing sewing, and so she decided to start sewing masks. And so she sewed hundreds of masks, and we've given them away to children who are rag pickers and other people of different backgrounds. And so there's some of that has been happening, and the kids have done a little bit of work, and I think they find it interesting. And I like to, like, if we go to Mumbai for a holiday, I like to take them on a tour of the Dharavi slum or something like that. I just really find it fascinating. You see how people are living in there, and see that there's a chance to make a difference. The kids don't like that as much as I do, but it's a learning experience, and so then they realize.
Yeah, it's kind of soaking into their psyche. It will one day translate as they grow older, I'm sure, as it probably did in yours. And a big shout out to Amelia for, sewing and giving away hundreds of masks. This is a fabulous initiative of hers.
Yeah. We're very proud of her for doing that, and excited. And she got some help because, of course, it's like a production line. So some people need to do cutting, other people need to do stitching, so she got some help from her brothers and sisters, but she was really driving.
So put the family to work, you're saying?
Yes, correct, yeah.
Incredible. So I'm going to kind of jump from the family to another interesting topic you brought up, basketball. You're a basketball player. You started a club in Bangalore?
Yeah. So basketball has been something I've played my whole life. Not at any, certainly not at a professional level, or even at. I went to college at Duke, which is probably the best school in the U.S. for basketball, and I certainly wasn't good enough to play there. All the guys are. I'm a little over 6 feet tall, but those guys are much taller and longer and faster and stronger, and all the things that are important in basketball. But for India quality, I'm a good player, even at my age. But yeah, so I like basketball, and my kids all play. And when they were younger, which is a while ago, like 10 years ago, we couldn't really find anyone to coach them when they were 5, 6, 7 years old. And so, yeah, with a couple of other friends, started a basketball academy here in Bangalore called Get Buckets. And so it was a pretty informal thing. So just every Sunday, 20, 30 kids would come, and I rented out the grounds at Mount Carmel College, a college nearby where we were living, and had a group of kids come play, which was fantastic fun. And a number of the kids went on to be quite good players, played on the state team, and so that was good. Although eventually, our kids got older to where they could get more professional coaching and more dedicated coaching who could coach them on a daily basis. And that kind of thing.
So how many kids come to this basketball coaching center that you've created?
We just have about 20 to 30 every Sunday, and you really, more than 20 is not good, because the basketball court is only so big, and we were working with one basketball court, and we had 3 or 4 coaches, so we'd have a low coach to player ratio. But we weren't looking to do it in massive volumes. We were really looking to do it in a more high quality way. But although we stopped it 2 years ago, as our kids got, kind of grew out of it, and they got busier with school as well as with other basketball and other activities. And the coaches also and the other coaches were like me. They all had children who played, and their kids also kind of outgrew it. So it was sad to close it, but at least my wife was happy that we didn't have that every Sunday obligation to.
Interesting. So I'm going to kind of now jump a little bit into your professional side, and everybody is very eager to know a little bit more about Unitus and the work that you have done in the past. And then, of course, I want to ask questions about what next. But let's start with, what Unitus has done and the areas you've worked in, the kind of opportunities or ideas and entrepreneurs you've supported in the past.
Sure. So we have an awesome team of 45 people here in Bangalore, 30 of whom are in our investment bank, and then which is called Unitus Capital, and then we have a lending business as well, an NBFC called UC Inclusive Credit, which is we just started at the beginning of last year, so a little over a year old. And so at UCIC, we give loans to early stage impactful companies. Those loans are generally in the range of 1 to 5 crore. As I said, that's a young business. We have a lending book of about 140 crore right now. And so we lend to a wide variety of companies in the financial inclusion space and in education, climate change, healthcare, etc. And then on the Unitus Capital side, we raise capital for impactful companies. That's for companies that are a bit more mature. So over time, we've raised a little less than $3 billion. So a pretty good amount in the impact space for impactful companies, primarily in India. We've done a little bit around. We've worked in Cambodia, Philippines, Indonesia, China, Kenya, etc. But the vast majority of what we've done has been in India. And so we raise both equity and debt for impactful companies. They hire us to raise capital for them. So we're focused on companies that improve the lives of large numbers of people living from low economic backgrounds. The sectors that have been most active for us have been in the financial inclusion space. So we're very active in fintech for good, in SME finance, microfinance, education finance, agri-finance, affordable housing finance, those kind of sectors, as well as we do a good bit of work in education, climate change related companies, healthcare, and agriculture. So the typical transaction that we do is a capital raise of somewhere between 500 to 300-400 crore in that size. So we don't work really with pure startups very often at all, but work across Series A, B, C, D, etc.
Given the the ecosystem in India over the last let's say the last immediate 2-3 years, that we've gone through our own set of calamities and tragedies. We've gone through government policy changes, and all of course that will work well for the future, but in the immediate context of things, they have impacted a number of businesses, small businesses as well as social businesses. Did that impact any of your investments, and how did you choose to help them, survive or pivot, or were there any thoughts that you have on that?
Yeah, so I mean, India is a fascinating place, right? And you have to thrive on chaos, or else you should leave the country if that's your option, or move out of business or something if you're wedded to being in India. So you have to embrace the chaos. And so I think that as long as you can do that, then you find ways to survive. And there's obviously like the concept of jugaad and those kind of things. But yeah, our business has been constantly, since the time we set up, blindsided by things happening beyond our control. When we first set up, we were raising money mostly in the microfinance sector, and there was as many would recall, there was a big crisis in the Andhra Pradesh sector. In Andhra Pradesh and microfinance back in 2010, which found the sector to halt. And then of course, when demonetization happened 3 years ago, that was a big issue for every business in India. And that certainly hit our clients hard. Because we do a lot in the financial inclusion space, we are also significantly affected by the fallout from the IL&FS default, and then Dewan housing and whatnot. So the last few years have been challenging, but at the same time, I think that despite that, we found that these companies focused on really solving real problem for people who really need it. So people who are doing affordable education or SME finance or fintech platforms that are helping SME businesses, those kind of things. Those businesses have kept scaling. They found ways to make money, and so the investor interest has remained strong despite everything. That being said, it was definitely obviously the COVID-19 situation is a much bigger challenge than any of these things that we've gone through before, and so right now is a particularly challenging time for sure.
So in those situations, in those last 3 years, when they have had to withstand and survive and grow, as a fund or as a NBFC, were you able to? Were you in a position to add more capital to them to keep them going, or did you just feel sometimes that this is probably not something that needs to move forward? This is something we should just cut short our losses because it probably doesn't have the legs to stand on to move forward. Were there those kind of decisions that went through your team?
Yeah, so we launched our lending business after demonetization, and in fact we launched Unitus Capital the same week when Lehman Brothers went bankrupt. So we have like a history of doing these. We're actually launching an equity fund right now as COVID-19 has hit, and so that seems to be like a recurring theme with us. We should warn the world when we're thinking of doing some new idea, so people can prepare. I think what we saw, at least coming out of demonetization, we launched our lending business. We saw lots of good opportunities, and so we rapidly deployed a lot of capital coming out of that. And our investment banking business, we're not putting our own capital at risk for that part of our business. So we're partnering. We work for companies like say Gayatri's company at LaborNet, who you just spoke with. A company like that would hire us to go raise equity or debt for them. And so then we have to find investors who are going to put their capital at risk in that environment. And so we found that investors have continued to invest through this period of time. There was maybe a very small slowdown during demonetization, for example. After the ILMFS crisis, people continued to invest through that because businesses carried on without seeing a large increase in receivables or those kind of things. Now the current COVID situation is quite different. Of course, as our NBFC business, we borrow money from banks, so we had to, and other NBFCs, so we had to keep repaying them because they generally did not give the moratorium to us, with some exceptions, and certainly we're very grateful for those. But then our clients, many of them wanted moratoriums, which we considered on a case-by-case basis, and had to give to some of them. So we did stop lending for the last couple months. I think we're getting to the point now where almost all our clients are repaying again, and we can start extending loans to existing clients as well as new clients. So we're looking at that. I think we don't. As I said, we're raising an equity fund right now. If we had a fund, it would also actually be an amazing investing opportunity at the moment to invest in companies where others aren't willing to take that risk and maybe don't know them as well. And so we are excited to get to a point where we can start making investments in this.
Are there any specific areas that you think would be the post-COVID investments that one should look at, or as for entrepreneurs who are here in the audience listening to you, what are those areas that you think would be the post-COVID opportunities, if you will, that could probably create change as well as I don't want to say benefit. It sounds kind of horrible given the situation and lives being lost, but create change and probably give livelihood to people. What would those areas be? Would you have any advice to potential entrepreneurs?
Yeah, I mean, I think that you build a business for the long term, so you don't want to pivot your business model just to take advantage of something that's really short term like this pandemic. But I think what where we are seeing that frankly for the capital raisings we do every month we close 2, 3, 4, 5 transactions, and that was the case up through March. And then since March, we've closed only a couple more transactions, and we still have some closing now, but our business has fallen off significantly for sure, like most businesses have. And but where we are seeing interest today, and where investors are willing to consider making investments today, are things like ed tech, where you have where people, of course, because schools aren't physically meeting, a lot more things are being done online. And so there's significant investor interest in the ed tech space. Companies in that space have actually seen their revenues go up during this time, as long as they have a digital sales model. Similarly, I think that that coming out of this, you've seen an increased sale of two-wheelers, including electric vehicles. And so I think the EV space is another space where it's possible to raise capital right now. And so, we work with a lot of lending businesses. For those businesses, frankly, it's really difficult to raise money right now, because people are seeing repayment rates go from 99% down to, for a while they were down at 0 or close to it, and now they've rebounded back to 50 or maybe even 70, 75%. But that people are saying, we don't know what the impact will be. But if you have a savings-led model, which some of our clients do, where they're aggregating savings as, say, a business correspondent for the banks, those businesses are doing really well, and so we're seeing investors willing to make investments in that sector today. Similarly, tragically in this crisis, of course, the worst thing is that you have lives lost, and lives lived unfulfilled, and so you would think that with the crisis that the healthcare sector would be doing well, but of course it's not. Hospitals are empty in a lot of places, and so the ICU units of COVID hospitals are full, but otherwise people are not taking medical help, presumably because they're scared to go to the hospitals, and or they don't have the money to pay. And of course you don't have people traveling, so you certainly don't have any medical tourism, and those kind of things happen. But if you have some kind of COVID-19 angle to your healthcare business, and then there's significant interest in looking at those kind of investment opportunities today as well.
So would Unitus only be looking at people who have already been in the space and now can adapt themselves to the post-COVID era, or is it also several people are out of jobs or getting there very soon, because I think many organizations are kind of checking their headcount and trying to get their balance sheets to a better place by reducing headcount. So there are intelligent people out there who are now going to say, well, what next? I got to do something. And so there's similar areas that you're talking about, whether it's ed tech or whether it is even healthcare with a COVID or a COVID-like angle, about new virus kind of angle. Would those kind of ideas also, seen meritorious in your impact, in your investment portfolio, or do you not do startups?
Yeah, we generally don't do startups, just because our business model is one where we raise capital for businesses, and when we successfully do so, they pay us a success fee. But there's that fee is a percentage-based success fee, and so as you can imagine, if you're doing a transaction that is 200 crores is much better than doing a transaction that's 2 crores. And that there's, you can increase the percentage, but there's a limit to how much you can increase the percentage. You can charge like a 50% fee. So it's like, or even a 5% fee is really hard to charge, right? And typically 2, 3, maximum 4%. And so it's hard for us from a business perspective to survive if we do startups. And frankly, doing startup funding is also it's more challenging. So it's much easier to raise 200 crores than it is to raise 5 crores. And then the last thing is that for startups, they often end up raising money from people that they already know, so from people within their network and whatnot. Right. So it's hard at an institutional level to raise startup funding. So when we see people who are starting things that we think are really super impactful and also promising from a business perspective, but are too early for us to help them on a formal basis, we very often help them informally, making connections, doing those kind of things, because we're excited by the business. Of course, ultimately, we hope that eventually they'll become clients for us, but really just trying to help them get off their feet. We do that a lot, but it's hard for us at an institutional level to help them, and with a formal mandate if they're raising less than 50 crores.
So post-COVID, this whole impact funding scenario. I mean, yeah, I'm sure you speak to other colleagues who who are running impact funds. There must be some collective thinking amongst all of you about. There must be some collective thinking between all of you about, which path to take or which not. Is there a ticket size that would be, kind of risk managed? Are there any kind of post-COVID thoughts on the impact funding scenario, or has the model completely changed, or is it just tweaked going forward?
I mean, I think that it will be mostly tweaked. I mean, investors are frankly grappling with this because I think the great news for entrepreneurs who need to raise funding is that the money is there. So it's not that liquidity is gone from the market. It's not like all of a sudden all of this money around the world has disappeared. In fact, if you look at banks' balance sheets, they've increased significantly during this time because they've stopped lending for the most part. And similarly, if you look at impact investment funds or mainstream venture capital or private equity funds, they have capital, right? Their LPs have committed capital to them. They're going to invest that capital. They're not going to give the money back to their LPs. That like never happens. And so that the money is there, and especially from a fund perspective, they have a window to invest, typically 3-4 years or so that they're going to invest. And so if they pause for 6 months during this time, that's just going to put a bit more pressure on them to invest as we come out of this crisis. So I think that the money is going to be there. Obviously, they'll want to invest in strong business models and in great entrepreneurs and great management teams and leadership teams. But I think that it's right during this time, and funding has happened during the last few months. So you've had a number of transactions that have gotten done. Of course, you had really high-profile ones like Geo has raised money from everybody and there are others. So it's probably a record private equity quarter for India just because of one company. But more generally, I think we're going to have a higher level of investment over the course of the next 18 months, assuming that the world doesn't fall apart, which I don't expect it to do. So I think that there will be things. So it's just a matter of surviving this painful period, because the base reason people aren't investing today is, one, they don't know exactly what they're investing in because people's revenues are down massively or their collections on their loan repayments are down massively. And so people don't know how the businesses will survive this time. And then two, investors can't do the normal things that they need to do to make investments. They can't go out and do due diligence. They can't come meet you in person. They can't go out to the field and see how you interact with your clients and those kind of things. Now, we are seeing inclinations that there are a few investors who are innovating on how to do that and trying to see if they can do that online. But those are exceptions. That most investors haven't gone down that path yet. I think they'll have to if for some reason we all can't travel for another year. But that's not my expectation. You see, in most places around the world, people have started to travel. I think India is a bit of an exception that we still have quarantines between states and those kind of things, which are probably necessary. But I think we'll get back to being able to physically meeting in the not too distant future.
Interesting. And so you think with what you just mentioned about Geo and the new investment, you think WhatsApp is going to become the next bank?
Good question. Actually, immediately before I got on the phone with you, I was talking to Bobby Bose, the CEO of WhatsApp India, who's a close friend. And so there's obviously, they already have a pay thing there, yeah. and they have, and all of us are on their platform for hours every day. So they have the potential to do so many things. Whether they'll feel the need to become a bank, I'm not sure of, and whether the regulator would let them be a bank. I don't
like
know.
A payment solution, I'm saying if you have Paytm on one hand, which is becoming a bank, where you have Geo, the internet infrastructure, and then you have WhatsApp, the communication platform, where people are already created groups, and so sharing and transferring money one to the other is not a difficult next step. Yep. So it's always something on the top of my mind saying, well, that's a great move if they've taken that path.
The feature is already there. It's just not enabled on the phone. So I assume there's an interest in doing that. And certainly if you look at, like, in China, there's WeChat Pay and the like, which is like a massive thing. right? So it's a very logical thing to move in that direction for sure. There's not, of course, there's not much money in payments, and so we can all do Google Pay or Paytm or UPI or whatever it is without really spending any money on it, and so they'll have to think about that. But of course, WhatsApp is in the data game, and data is super valuable, and so if they can see where we're making all our payments, which they can, then that's very valuable to them.
Interesting. So I'm just going to kind of quickly have a check on our time so that we can then take this forward a little bit more. Okay, I think we have a little bit more time. So Eric, let's talk a little bit about not necessarily Unitus and the impact funding that you do, but in general about corporates and CSR and how they would invest in this. Now, this was becoming a mandate by the government that they would have to spend 2% of their profits in creating, into socially good causes. But if businesses are suffering, then the profits are down. Where is the CSR money going to come from to support these good causes?
It's a really tough thing. I mean, and to be candid, we work in the impact investment space, and so we don't work a lot in the CSR space. So I don't know directly, but just having friends who run nonprofits and the like, it's like super difficult. And so, there's a lot of money available right now for something that's fighting COVID. But if you're doing anything else, if you're trying to help, children, homeless children, or animals in the wild, or any number of amazing causes that are out there, money has dried up because I think just it's been diverted to COVID, and of course everybody has less money, and so I think individuals are donating less than they would have otherwise, and corporations definitely will as well. As things get cut, CSR budgets will get cut. As you said, it's the national legislation is a percentage of profits, and profits are going to be down, right, massively for most companies. So it's definitely a big problem for funding nonprofits at the time.
But government was hoping that this is possibly a way to, execute their vision of also supporting change, whether it's infrastructure or water or sanitation across the country, by bringing partnerships with the corporate world by defining the CSR fund as a percentage of profit. Now, if that dries up and the government alone can't, get the job done, I think maybe a policy that says that it's not part of your profit, but just put aside the 2% in any case, and we'll kind of compensate you elsewhere, maybe through electricity tariffs or some export credit, or maybe even a tax write-off for some reason. Maybe what do you think about that? It's just a thought in my mind, and your thoughts on that.
I don't think it's going to happen, to be honest. I think that one, corporate India would put pressure on the government to try to keep that from happening, because companies are struggling. They're laying off workers. They're cutting. People are taking salary cuts. Is happening at most companies, and so I think then they're going to be hesitant to put as much money aside for CSR, despite it being desperately needed. The other problem, of course, is the government is in trouble from a financial perspective. Exactly. as well. Tax revenues will be down massively as a result of this, because incomes are down, because profits are down. And so the government itself will be struggling. And for the government, then the government has huge reserves and has massive Forex reserves, but I think has been hesitant to dip into those for stimulus packages as a result of COVID-19. Right, there was massive announcements, but a lot of those things are not really cash. Most of it is not cash outlays, and so. Yeah, funding is going to dry up, and inevitably it has led already to a lot of people slipping back into poverty, and the people who are already in poverty being in a very difficult position. So
it's going to be a massive slowdown then, I guess, from what you're saying, for the next few years.
Well, I mean, the economy has slowed down. It's rebounding right now, but I think that slowdown is real, and people will have dipped into the to the profits into their cash reserves, and then a lot of people have lost their jobs. The government statistics say most of those people have gotten their jobs back, there's some skepticism around that. But certainly, people are going to be struggling for basic things, for food, for rent, for healthcare services. So all of those things are a real challenge, and so there's going to need to be a recapitalization of a lot of companies to bring cash back in, and so it's going to take a lot of lending from the banks, a lot of investment from impact investors, from private equity sources as well. And the good news is there's going to be a lot of great investment opportunities. I mean, still in India, the positive things about India in terms of the growth opportunity, the young demographics, all of the fantastic hardworking entrepreneurs and people and whatnot, that's all there. So it's going to be a great place to deploy capital over the next 2 years, but you're going to have to be ready to step up and take risks.
I was just going to ask you that. Just took the words out of my mouth, the question out of my mouth, actually. So you do see a good inflow of foreign exchange coming in to support these kind of investments in the post-COVID India and opportunities here?
Yes, I think that, as long as things don't completely spiral out of control from a health perspective, so as long as investors coming from wherever, Switzerland or Silicon Valley or Singapore, are comfortable flying into the country and coming and having meetings, and the health risk isn't too bad, which I'm confident will be the case as we get to the end of the year. Then yeah, people will see that there's a big investment opportunity here, and you continue to have all of these great business models led by fantastic people that have the real opportunity to grow, and that growth opportunity will be bigger, and to some extent, some competition will be weeded out, right? You've already had a number of businesses go bankrupt, and that's going to happen, and that's going to create opportunities for others, and there'll be more merger activity and those kind of things, definitely as well. We're already seeing that.
Great. There was one question, I think we kind of addressed it, but I'll ask the question anyway. There were others, but I think we have addressed most of them. One question that came up from one of our viewers is, can impact investment replace CSR? I'm not sure we exactly addressed it directly, but maybe that's something you can do. Sure.
I think that sometimes it can and sometimes it cannot. And so if you look at right now, one of the biggest impact sectors in terms of where funding has gone is the microfinance sector. And when I moved to the country 13 years ago, most microfinance companies were nonprofits. And so companies like what is now Bandhan Bank, one of the great success stories in the impact world, at that time was a nonprofit. And we actually helped them transform into a for-profit company. So they used to get grants and whatnot. And now they have a market cap of many, tens of thousands of crore. And so, and similarly, a company like SKS used to be a nonprofit, et cetera. So impact investing can do that. Of course, every problem doesn't have like a great business model around it that's hugely scalable, like a Bandhan Bank has been. And so if you're trying to, attack, slavery around child prostitution, there's not like an amazing business model around that where you do it. So you still need to have, grant funding and CSR funding to address many problems. So I think there are many, if you can put a business model around it, generally impact investing is better because it'll be more scalable. But there are a lot of problems where you definitely still need traditional philanthropy and CSR funding.
Great. Eric, I don't see any other questions, but I think it's been great listening to you. Congratulations on your new equity fund. I'm sure that you'll continue to do what you've done so brilliantly in the last several years. And we look forward to engaging with you more. Another shout out to Amelia for the great work she did for the mass and for the production line she put up. A lot of us could learn from that. And to Phyllis, your wife, thank you all, and stay safe during this time, and we'll catch up soon. Thank you for your time with us.
No, my pleasure. Thanks for having me. It's great that you're doing this whole event, and good luck with everything. I know you're doing awesome things on many fronts.
Thank you, Eric. Thank you.
Yeah.
Bye-bye.